Hi, thanks for joining me today. What I want to go through here is what you can claim and when you can claim it in your tax. So, the first thing that we always have to satisfy with claiming anything out in our tax is that it is necessarily incurred in earning assessable income. So, what does that mean? It means that there has to be a connection between you spending the money and you being able to generate your income for the job that you have now. So if you're at uni and you're working at McDonald's to cover, or to get through uni, there is no connection between your McDonald's job and your uni job. So you can't claim any of those uni expenses. But if you're an apprentice and you're employed doing your apprenticeship and you're going to TAFE, there's a connection between you earning that income and you spending that money at TAFE. So you can claim that deduction. So you've got to remember that any deductions that you have to be for your current earning capacity, not your future earning capacity. So if we go back to the McDonald's and the uni one, let's say you're at uni doing a law degree. Your future income is law and you can't claim any of that because it's not connected to your current earning, even though you will get an income at some point. If, however, you get to your last year and then you get a job in a law firm, anything from that point when you become employed in a law firm, you can claim any of those costs moving forward. You can never claim the costs that went back from that date. So you can't say, well, the reason I got the job was because I went to uni and I bought those textbooks and paid those fees and things like that. It doesn't work that way. It's only from that point when you get the job moving forward. The other thing you need to remember is that substantiate. The tax office will take the view that you can't claim anything till you can prove that you claim it. So we always say you're guilty until you prove your innocence. Complete opposite as it is in law. So what you need to do is be able to substantiate why you spent the money and how it was directly associated with you earning your income. You need to have a receipt or a basis if the legislation says you don't have to have a receipt. And things like that is, your domestic travel allowance and your overtime meal allowance and things. You don't need a receipt provided you meet other circumstances, and I have covered that off in other videos if you want to go and check those ones out. Things like personal use of an asset. So if you buy tools that you use at home to renovate your home, you can't claim the whole lot. Or if you use your mobile phone for work and personal use, you've got to prorata those expenses. So it is really important to remember that you need to be able to substantiate any claim that you put in your tax return, because under the self-assessment, whatever you put in, the tax office will process. But if you get selected for an audit, you need to be able to verify why you made that claim. If the tax office deem that you've claimed incorrectly in your tax return, they will charge you penalties and they will charge you interest for lodging a false tax return. The other thing that you do have to remember is that as an Australian resident, you have to declare all worldwide income. And that's there so that if you worked in the UK for 6 months in that year and you're still a resident for tax purposes in Australia, you will need to declare that income that you earned overseas. If you've got a bank account sitting in, Canada from when you were a young child and you went over there and worked, well, not young, but you went over there and worked and you're earning interest, that interest needs to be declared in your Australian tax return. So it's really important that you remember that when you lodge the tax return in Australia, you sign a declaration to the tax office to say that you have declared all worldwide income. Everything that you have claimed is true and correct, and to the best of your knowledge, claimable, that you have declared all income that you have earned, including crypto. And if you've got any crypto, I've got another video on crypto that you should go and watch. But it is important to remember that you need to lodge it accurately and to the Australian laws. Now, there is no defence that I didn't know, because the tax office say you can ring them to find out or you can engage a tax agent like us. So don't think that you're going to get away with saying to the tax office, oh, I didn't know, my mate told me that. And this year in particular, because the tax office is going after the low-lying fruit, they've been very open about that, work-related deductions, crypto, rental properties as usual, and all the work travel and motor vehicle expenses is on their radar. They've got to collect money. They've spent a lot of money in the last 2 years. Don't be one of those taxpayers that gets caught. If you're not quite sure if you can claim it, bring it up with us and we'll go through and work out whether you can claim it or not. Remember, the penalties that the tax office charge can be anywhere between 0 and 200% of what you claimed. So the 200% is where they think that you have actively tried to defraud the Commonwealth. The 0% is somewhere, sometimes they'll use if they can see that it was a genuine attempt, but you got caught up in something quite small. Rarely do we see the 0% and rarely do we see the 100%. Mostly we see around that 40-60% as a penalty. So don't let yourself get caught. If you want to know what you can and can't claim, there is a stack of videos I've put up this year. We've got check sheets that are going to come out to you. Or you can reach out to us at 123 Financial Group. So that's it for this video. Thanks for watching and I'll catch you all very soon. Bye.